journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, looking good. Billy Ray, feeling good, Lewis. It was about 1980, which was a long time ago, 45 years ago. Silver was making a high at $54 an ounce. That was on January 20th of 1980. Gold topped also on that day, January 20th of 1980 at 865. From 865, it went all the way down to $230 an ounce over the next 20 years. It bottomed in 2001, and now we're trading. Hit a high today in spot gold at $28.35. We'll go through that in just a minute. Now, here's where we are in silver. This is a daily chart. We have a 1-3-5 pattern, folks. 1, 3, and 5. Now, silver is trading at $32.50, okay? That is, believe it or not, 40% cheaper than it was in 1980 when it was trading at 54. That's a strange coincidence, isn't it? I happen to be involved in those markets very vividly, but we're going to cover those one at a time here to show you what we're looking at. So first thing I'm going to do is to move this over, and I want to come over and get to the where I've got these two gold charts up here. See, the problem that you have with the gold, folks, is that you switch these contracts over and over, and that makes it a little bit difficult. So here's we're going to take a look here. This is the February gold. This is actually April gold now. See, so what we really need to do, and I had it there, but it disappeared on me. We need to go back and see where we were in February. So we just come up here, and there's February gold, and you'll see here that we have now taken out the high. You can see here, our old high was right back there, and we've taken that out by, well, didn't take it out by much. This high was at 22. Remember, this was 22. We were trading at 28.01. Remember, then we had a $200 and some break right here, 250, and now we've made a new high just today by $2. So it hasn't really, exploded to the upside. So now what I want to do is to show you the April gold. We'll get this out of the way, and April is going to be right here, and we're going to take this and we're going to draw this on the daily chart because this is where we thought it was going to get to. We got a little bit more to go, and that's up here at 28.62. That'd be a 1.618 expansion of this move that's going on right here. So this is the time. I mean, no, you think you have to be crazy. Well, let me refresh this. Well, crazy is a relative word, I guess. Anyway, you see, we even had this is not a gap up because it's futures. The other things did, but this gapped up, but it really doesn't gap up. All right, so anyway, that's what I'm watching here in the gold and the silver. So it looks interesting. Now we'll take a quick look here at silver on a little bit shorter time frame. You'll notice here that we made this high here at 32.81, and then we had a pretty good break. We broke about 40 cents. So you put this in here. There's the break. There's our 40-cent break right here. And where did it stop? Pretty much right where it was supposed to. Well, it went to the 50% level, and so far we're rallying back. We're a little above the 382. Nothing really to say anything about it. Yeah, it's right at the 382 now. Don't do anything here, folks. Wait till you get this another $20 higher in the April. But this is a time when you want to be looking at this because these are patterns. That's all I know. So that's it. Now, remember yesterday we were talking about the soybean meal, and we did get came within $1 of the exact price in soybean meal, but that didn't happen. So that was a trade that we missed. There's not much you can do about that. So we'll take that off the bag. But we've got another one here that is knocking on the door as we speak. And I do mean knocking on the door. So let's come up here and take a look at this. This is our wheat contract. This is March wheat. And what we're going to do now is we're going to go look at it on the daily, because it's got, there it is right there, folks. We want to get to that level. We'll move this out of the way. So you see we've came within 2 cents. So the sale is at 571, and we're very, very close. We should make it within, the high today was 569 3/4, so we're 2 cents off of that. And as you can see here, we still have the ABCD pattern that is lined up for this one. Shucks, it didn't draw the right one in, so let's get rid of this. Okay, and someone asked me, oh, shucks, it's just not drawing the right way. I'm going to have to draw it with a tool that says draw the line. So there's the line tool right there. That didn't even draw it right, Doug. Oh, that's got to be Byron. Just a minute, just a second. This is very important. Okay, there's the line right there. There's where we are right here. And we've just about made it, but the actual number, well, it says it hit it right on the number. But the, yeah, there's the ABCD right there. Clone that line, and it's there on the ABC. Oh, what did it do to me? This is not my day, folks. And there's our number. We've made the ABCD. We're waiting for this number right up here at 71. Mathematics precedes geometry. This is geometry. And so that's what I'm waiting for, is to see it get just a tiny bit higher. And of course, if it doesn't get there, you know, you have to find a place to sell it. And the best place would be to watch a 382 retracement, you know, to pull back and sell it that way. Okay. Anyway, that's a really nice pattern, folks. Let me clean all this stuff out, so I delete everything. But that's what we're watching. There's the number way back here, banging on the door. And wheat has a really strong. Well, we're really close there, folks. I mean, look at, we've taken out the highs of December by a penny and didn't go anywhere. I'm tempted to sell it right here and just, you know, forego the fact that it might miss the 3 cents. In fact, that's what I'm going to do right now. Look at that. We took out the highs of that level right here by a penny, and there were no buy stops. You've got the ABCD measured right here, so you sell it here at 68, and you put a stop instead of 72. You put your stop at 75. You got to risk a little bit more. But that way you'll be sure to get in. I'd rather be in. Well, that's one of your favorites, just fear of missing out. So anyway, that's what we're watching here. So I am going to sell the wheat here at 68, and let's just put this in here. Put the stop in at 575. Risk 8 and 5. I'm going to risk $350 on that. And then if it's right, it's got this much potential, which is pretty good potential, because the last time it backed off from this level, you'll see that it came down to right there. That's well, you're risking 350 to make 1,400, folks. That's 5 to 1 to put in your trading bag. So that's it. That's what I like about this wheat. So we're going to find out if that's going to be the case or not. So let me check and see. I've got a little bit of a cold today, folks. As you get older, you get these summer and winter colds, and I've certainly got one today. So we've got 35 seconds left. So let's take a quick look at Tesla. We should have been, hold on. We'll be right back, folks. Wow, this thing's not working right. Give me a second.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry has been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is Tesla over the last few days. Something really dramatic has happened in Texas. You can see the 3 drive to a top here back on the 17th. We had to move down. We went from 440. We dropped about $60. And now we had a big ramp. But look at this, folks. This, because of this big bar like this means that this had to open up in here. So let's go to a smaller time frame and see if that's correct. Yeah, you see, this is what happened. The market shot up on the opening right to there, and then it sold off, and now it's working its way back. See, there's a high from the previous day right there. It opened right at the 50% level and went all the way down. Look at this. This was the report. Then it came down to 385, and now it's back up again, and we're right at the 382 again. That's very, very unusual. Okay, now let's get back to the history books. Sometimes, you know, you don't get to talk to old-timers like myself, but we're going to take a look. We're going to go down memory lane because it's one of my favorite memories. Get this old gold chart up in here, gold up in here, and we'll get the weekly. We'll get this monthly gold chart, and we're going to go all the way back, boys and girls. Let's get all the way back to where we want to be, back in history. Now we're going to go back. Well, it doesn't go back that far. Shut the front door and raise it. Let me refresh maximum. Maybe it'll give me more. Yeah, nope, it doesn't. Well, shucks. Anyway, I'll tell you, here's the story. This is where we were. This is not the January 28th, but this is where we were on January the 20th of 1980, okay? Now, gold was trading at $763. It was limit up. Limit was $50, and it was limit up, and all the months, all the way through from, this was January, all through to December, because interest rates were out the kazoo. Carrying charges were crazy, right? So what happened was December gold for that year was trading limit up, and so I called the floor, and I had some counts up here. I was figuring a top coming in right here, and folks, we got out of all of our gold on January the 8th that I've been buying for several years. We got out on January 8th. The reason why? Very simple. It was Elvis's birthday, but more important than that was if you sold gold then, you didn't have to pay for it for 18 months. because all you had to do was roll it over. You didn't have to pay taxes. Unfortunately, they caught us by the quietus about 8 or 9, 10 years later, and they backdated that stuff, and it was a little nasty, but that was the way things were back then. Anyway, the stock was up here at 865. Gold was trading at 865. I called the floor, and I asked, Richie, I said, on December gold, where is it at? He said, it was like 10,010 or something like that. It was $150 higher, mainly because of the fact of the carrying charges. So what I did was I said, okay, sell me one December gold limit up and get back to me. And he said, oh, Larry, he said, Larry, you're one of our best customers. Don't do that. You're just throwing money away. I said, Richie, I said, how long have you been down there on the floor? He said, about 6 months. I said, okay, Richie, sell me two. And he said, oh, you smart ass. And so he sold me two. And he came back with the fill. And I said, Richie, put an order in to buy two $100 lower. He laughed at me. He said, man, you've lost your mind. I said, yeah, I just put it in for kicks and giggles, okay? An hour later, folks, I got filled on those two contracts. It was $22,000 in 1 hour. I've never made that much money that fast ever. And anyway, I went out crazily like I usually do, went out and bought a car, a Porsche. Unfortunately, the Porsche didn't run very well. I only had it for about 9 months. But anyway, we're in, you can see where we are now in a long-term picture. We are at some topping area. How high it's going to go, I don't know. I remember my original top was at 1803, and that was right there. That 1803 was right there, and that was a $250 drop. That just shows you how strong this thing has been. Over the past few days, I've been talking about how bullish it's been because of every time it even gets nearer to a 382, it just goes wacko to the upside. So that's what we're seeing right now. You see, it's just bang, bang, bang. Here was a breakout early this morning when it took out the old highs from back here. I mean, that was, real early in the morning, like 2 o'clock, and wham, there she goes, and she's still going higher. But this is the kind of market that it might not top here, and it probably won't. But if it does, this might be the reason. That's all I'm trying to give you information on, okay? So we'll get rid of this, okay? And we got the wheat is still, we're in the wheat now. And now what we want to do is we want to take a look at the E-mini. I prefer not to do that. That one makes me ill, but we'll look at it anyway. Let me get the time frame up. We'll look at it's all over the map. Remember, yesterday's low was a triple, just all kinds of stuff right there. We talked about that. All we did last night as we went up and made a little ABCD here was the early morning, basically taking out didn't even take out the previous day's high. And then today we had a big break, and of course, where does it stop? You can see exactly at the 786, right on the money, right there. And what have we done? Done the same thing right here. I'm waiting for a really clear ABCD that doesn't violate this daily that is up there at 6160. If we get above that, folks, that's telling me that all this work I did on these cycles is not right. And I have to go give it some time. The reason why is because it's such a big one. That's they're very rare. So you've got to give it, gets above that level, then by golly, that's it. But for trading purposes, you can watch here just how quickly it moves. You can see there's your look at the pullback right exactly at the 618. You think these guys on Wall Street don't know what these numbers are? Of course they do. What does that yield you to? Back to test the highs of the day again, right there. AB equals CD, and you'll see that's where you'd want to be. So we could easily take those highs out and not mean very much because this is the number right back here. If we take this number out, then there's trouble because there was a 23rd. Remember, folks, we dropped down 160 handles into that thing. It looked like, oh, my goodness. But you see how long it stayed there, right? A couple of minutes, and then away it went. And we've been here now for 1, 2, 3, 4 days. If we close above this, this is going to be the sign that, this is in danger. And that's what we're waiting to see, okay? So that's my 2 cents worth, and I'm sticking to it. I hope that makes some sense, but we'll do one thing at a time and see what happens with it as we go through looking at these different charts, okay? All right, now let's move over here, and we're going to take a look at the crude oil, because crude oil has tried to, Mike Moore will be on talking to us about crude oil and all the others, but crude oil went down. If you remember, we tried the low here. All it could do was rally 40 or 50 points. The stop, we bought it right there. Stop was at break even. And today we had a pretty good rally, and all that rally did is you go back and look from the last major high that we had there's two of them. There's one right here, which was a big retracement here. This one went right to the 50% level right there, and we'll clean that out, and it made the 382 of the big move right back here. I remember because the beeper was going off, and there it was right there up at 73.54, and so we're just coming down into it right now. It's starting to get a little bit of a bullish pattern here over the last hours because you got higher bottoms coming in, and that's why we want to be paying close attention to it, okay? So that's what we're paying attention to now, and we're going to have Mike Moore as our guest here. He's going to go over all of the frackings, the heating oil, gasoline, and the natural gas, and also crude oil, along with the gold and some of the other things that he follows so nice and perfectly. Anyway, we'll be with you. Mike Moore coming up next, folks, so stay tuned, please.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, talking with Mike Moore of Moore Analytics. Mike, start us off with the fracking complex, starting with crude.
All right, how are you, Larry? Thanks for having me.
I'm living the dream, baby, on the green side of the grass.
Yeah, in Phoenix,
I think.
Huh? Good for you. Can you see my screen?
Say again, please.
Can you see my screen?
Oh, yeah, you're coming in perfect. Got a beautiful, clean white shirt. Well, I think it's clean. It looks clean from my perspective anyway. So anyway, thanks for being here with us today. I love your office, too. Boy, that's a really lovely office.
Thank you. I appreciate it. Can you see my screen now?
Yes, sir. Coming out perfect. Yes.
Okay. All right, starting with crude oil, we're chopping sideways currently. This is a little backdrop here. I warned the trade back below 78.49 should bring in solid pressure, likely for days, and we've come off $6.47 so far. We may have been on the show last time when it was probably back here a week or so ago, but the break below here, as I said, should bring in solid pressure for days, which is what we've been seeing. I'm actually going to jump to the Brent real quick to that I think will speak to this situation. We've come off and we've held this trend line right here, and we're trying to break above this one. This is not a decent break enough yet. I think a decent break's in there, 74 ticks today. But a decent break above there, which is going to come in at 72.86 minus 2.3 per hour starting at 1 o'clock p.m. will warn of decent strength. And likewise, a decent break above there and a decent break back below will warn of renewed pressure. We take out this formation down below, which is going to come in at 72.40 plus 0.7 of a tick per hour starting at 1 o'clock. That'll warn of decent pressure. And likewise, that would be a good fade if we break below there decently and back up through it decently. Anyway, I just want to jump over to the Brent, which we don't normally do, but the Brent had broken below a similar formation here this morning and then broke back above it right here. So this is bullish now. So even though the crude hasn't broken above its line decently, this suggests to me that it's likely going to. And then just jumping to the RBOB or unleaded gas. Going back to the February when we last talked on the show, I said that in the February, the break below 211.26 projects us downward 3 cents minimum, 6 cents plus maximum. We went on to attain 10.26 cents of that to the downside. And then this turned bullish. We'd broken above a bullish formation right here, pulled back to it, sort of chopped sideways here. And then I said to get long above this formation right here. So we popped above there, should be long right now. We did not see a decent break above this line yet, but that'll also be bullish. That line's going to come in at 207.32 minus 2.4 per hour starting at 1 o'clock p.m. And the heating oil also got bullish this morning. We had been bearish in here on 121. We left a minor bearish reversal above. And then the trade below 247.29 brought in 11.79 cents of pressure. And then I said this morning that decent trade above 236.55 minus 9 per hour will warrant a decent strength. So we got that decent break right here. If we were to roll over and take out this formation, which is going to come in at 237.07 plus 2 per hour starting at 1 o'clock p.m., that would warrant of decent pressure again. In the Brent, we already went over that. If this fails back down through this line again decently, I'd take another shot and get short below it. That's going to come in at 75.78 plus 0.3 of a tick per hour starting at 1 o'clock p.m. And just likewise, just some backdrop in here, the trade below 81.17 had projected this downward $1.25 minimum, $2.60 plus maximum, which I think we talked about on the last show. And then we went on to attain $6.19 of that.
Okay.
And then finally, the gas oil.
One of our listeners, you don't use any fundamental information at all. Is that correct? That was his question?
Correct.
Okay. Thank you.
And then, by the way, just for your listener, I've sent my analysis to the guy who founded the analytics department at ConocoPhillips, who had all the finest fundamental data that you could imagine at his fingertips. And I asked him one day what he thought of my technical track record compared to a lot of the fundamental track records that he had been able to see there. And he said, your technical track record far exceeds any fundamental track record I've ever seen. So I thought that was a pretty nice compliment.
It sure is. And it should be, because you do have good work. People don't realize that all the fundamentals are in that chart. There's more buyers, prices are going up. More sellers, prices are going down. Nothing hard about that.
No, you make a great point, Larry. Let me not be misleading in any way in what I'm saying. The fundamentals are what power the technicals. I mean, the fundamentals are the fundamentals of the market. That's what moves the market.
Yeah.
It's just the technicals are a different way of reflecting what the fundamentals are doing, and they will get you in on movements and out of movements 90% of the time faster than what those fundamentals are going to paint the picture for you as.
Okay.
This is the gas oil. We've been bearish in here. The trade back below 751.25. Brought in 57.75 of pressure. And then I said this morning, if we break above the steep line, that would warn of decent strength. We broke above here decently right here. So we're starting to see some of that strength. If we were to fail back down through this formation, which is going to come in at 695.60, 695.75 to 695.50, decently, that would warn a decent pressure. And just a quick heads up right here. I had said this morning coming into today that the heating oil would be the strongest out of the three, the RBOB in the middle, and the crude oil the weakest out of the three relative to one another. And you can see, and where I show that on the charts is in here. I have these little weightings here. See how it says positive for the heat, equal for the RBOB, and negative for the heat crude. And you can see here that the heat crack is up 47 ticks. RBOB crack is up 26, and the RBOB to heat is negative 40. So if you would follow this and decided to be long the heat instead of the crude,
okay. Mike, we got to pay a few bills, so stay with us, okay? We'll be right back. We want to cover the S&P and gold. Okay? Stay with us, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with Mike. Back with Mike Moore of More Analytics. Please continue, Michael.
All right, don't worry, Larry. So I'm going to move to the S&P 500.
Yeah.
Okay. So a little bit of backup here of what we've been going through the past week. I warned of possible exhaustion at 61.325. We held this with a 61.6225 high and rolled over 214.25 into a bearish correction.
And the following Monday after that, Thursday, it dropped 160 handles.
Yeah, it really caved in here. And then we had a call that said that the trade below 61.2825 plus 41 per hour would project this downward 85 plus. We saw 180.25. That was the break below this line right here and just caved. Okay. And then we also broke below this line, which also projected downward. But then we held exhaustion down here at 59.34. 59.44 with a 59.48 low, and it bounced back up. And then when we broke back above this line, I got bullish again on top of the bounce here. And then we rallied up, pulled back, and bounced up a little bit. So that's just a little back up. So I said the trade back above 60.57.50 has brought in 54 of strength, and decent trade back below this line right here will reestablish bearishness, but it would not be a line that I would lean against as a short. That line is going to come in at 60.50.03 minus 14 per hour starting at 1:30 p.m. Eastern Standard Time. There's also a small formation that we have just above here, which comes in at 60.50.03. Minus 13 per hour starting at 1:30 p.m. That'll project this upward 50 handles minimum, 150 handles plus maximum. But today, a decent penetration above there is 25.75. So you may want to wait for a pullback on it to have a better risk reward on the trade. And likewise, if we break above it decently back down through it decently, a warrant of decent pressure.
We have a question. Do you only do the S&P 500? Do you do the NASDAQ and the Dow Jones? The person is asking. I don't know the answer to that. So,
no, I just do the S&P.
Okay, that's good. That's a good broad market.
I know there's a lot of
fine.
value to doing those, but I analyzed the entire energy complex, the gold, the Bitcoin, and the S&P. So there's only so much time in a day.
Oh yeah, trust me. Well, you got to go 24 hours like me.
Yeah, exactly. So I can only do so much. Now the gold here really turned around. Pull this up. Okay. We had made new highs. So a lot of these long-time calls that we've had here are all updating with new attainments in those calls. Just to show you something off the scale here, I keep track of all these calls like natural gas, crude, RBOB, larger time frame calls that we're in, and update how much we've made in some of these calls. So for instance, when we broke above 1183.70, this morning was the high at 2817.20. We've attained 1,633.5. And these are all the other calls, the bullish calls that I've made over the past couple of years that I've kept updating and putting them on hold and then taking them off hold as a hedge fund manager would manage a hedge fund. So right now, on a short-term basis, I said to maintain gap higher, we'll leave a minor bullish reversal below, which we are likely going to see. You can see here on a daily chart, we got that gap higher. So that is going to leave a minor bullish reversal below. Oh, it already did because we closed at 120. So, and then also I said get long on a decent penetration above 2812.90. That was this formation right here. And that is that's rallied up to 2853.20. I also said to get long above 2816.80, and then again above 2831.10. So we haven't quite broken above the upper one yet. If we were to fail back down through this formation, that would warrant a renewed pressure. That's going to come in at 283.27. +2 per hour starting at 1:20 p.m. Eastern Standard Time. We also broke above this formation, which is on a daily continuation chart. If we fell back down through that, that'll also warrant pressure. That's going to come in at 28.19.
Okay.
+2.5 per hour. So we're in new territory up here. I would also note that, so this is a higher time frame note. I said, note, we may be in the last stretch up from the 1618.30 low in November of 2022 with initial possible exhaustion at 2872.10. And the next main exhaustion above that is an area that is from 2962.70 to 2993.60.
Wow.
So those are areas that I would definitely be paying attention to. This one we're approaching pretty quick here, especially if we were to hold that and then fail back down through this formation, you could really see a sell-off. All right, and then the Bitcoin.
Oh, that's a big one.
Did you want to see Bitcoin or no?
Oh, yeah, we got to do Bitcoin. People ask about it all the time. You betcha.
Okay. So the Bitcoin here, we turned bullish a couple of days ago. We've been bullish overall. I've been updating this on the show from 16,275. We'd seen 92,685 per coin. A lot of other bullish calls in here. Those are all off hold. And then the trade above 96,375 to 420. I said projected this upward 6,800 plus. We'd attained 13,730 of that before being put on hold with the rollover. That has been taken off hold. And then the trade above 100,382. I said now warrants of renewed strength. And we'd seen 6,320 of that coming into today. That was a break above the steep line here and even more. And then we got bullish above this line. And this line, this is not a decent penetration above it yet. We're just shy of it. And that line comes in at 105,678.
Wow.
Minus 28 per hour starting at 1 o'clock p.m. And a decent penetration in there today is $1,855. And that penetration would project this upward fairly significantly, probably 8,000 per coin. Likewise, if we broke above there decently and back down through it decently, that would warrant a decent pressure.
Mike, are you like me? Have you ever bought a cryptocurrency? I never have. I just wondered if you had.
Not the actual coins, no. But with these, the great thing about trading the Bitcoin futures is these are futures contracts that a regulated exchange.
Okay. Hey, listen, thanks for joining us, my friend. And we'll post your data, post your contact information up in the room here so the folks can see it. We'll have you on in a couple of weeks. Okay, buddy?
Okay, sounds good.
Okay. Thank you, Mike. Bye-bye.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the Dow Jones Industrial Average Futures, and we're getting ready. Wow, we're getting ready to make a new high. We only have to go 17 more pips up here, folks. I got the limit minder in right there. We'll put it in right there. Well, if you like the wheat trade, you're going to love this one. Hold on. There's your A leg right here. Okay, there's your B leg right there. And here's your CD leg, comes in right there at 45351. That's up another 270 points. And we can do that today because that's 180 points from where we are right now. There's the old high right there. So how close have we been so far today? 74. The old high back here, Oh, it made it. 71. No, wait a minute. 76. 76 was the old high, and today's high was 74, so it's real close. Maybe that's it. Whether that's a double top or not, I don't know. Nobody else does either. But this has been a really strong one. This is a market that will never come down, ever. Almost like gold and almost like silver. So anyway, that's what we're watching here today. Pay close attention to this, folks. This was the big break off of the 24th of January that I thought was going to be a major cycle. Well, it's been a major cycle for a few of them, but not for the Dow Jones. The Dow Jones, everybody loves the Dow Jones. And you'll see here, these moves are almost identical. As you can see, you put them up in here, they're just pretty much spot on. So we could make that here today and tomorrow, and then watch that number at 45386. But you have to look at the Dow Jones index itself, folks, because these futures have, different trading hours. They trade all night, and they have open interest and stuff like that. With the Dow Jones index, it doesn't have open interest. It's a value of all the stocks, and that's what the one you have to look at. It should be making a new high today, and I will report on that tomorrow, but I can't do it today. So live every day in an attitude of gratitude, and may God bless, and please send some white light from my good friend Larry Leslie, old poker playing buddy who's up there playing with the stars. See you on the flip side tomorrow, folks. May God bless.